Just full disclosure, of course, I'm the director of SITE, but I'm also a board member of the Kyiv School of Economics, and I've been quite involved in discussing sanctions and supporting Ukraine. So if someone thinks that I'm too biased when I'm talking about this, you may have a point there, just as a little warning. We have a network, SITE, we are of course here in Stockholm, but we have a network of sister institutions in the region. So we have colleagues both in Moscow, in Riga, in Poland, Berok that used to be in Minsk is now in Vilnius. We have colleagues that are still in Kiev and doing important work down there. And they just admitted a new group of students for this incoming semester. So we're very happy that they can continue with their important work despite of Russia's aggressions against Ukraine. We also publish a lot of policy-oriented research in this network. So about once a week, we put up 4 or 5 page summaries of different things that people with an economics interest write about based on research and not just guessing for most of the time. So that's a further source of information. All right. What am I talk about here? I'm going to just have a quick discussion about sanctions in more general terms, connect that a little bit to my own work back at the IMF when we looked at crisis and shocks and how they correlate. Talk you through some of the sanctions on Russia, how would it work and why would it work, and some of the limitations we have with data. Tell you a little bit about the world's simplest macro model, and then what does it imply for the future, and then some talk about next steps in terms of sanctions. All right. The first questions you get, or the first comment you often get when you talk about sanctions is that sanctions don't work. I mean, that's a very common perception, and we hear it a lot now also with Russia. They haven't stopped the war, so clearly sanctions do not work. And of course, it's a very complicated discussion, and also methodologically, how do we figure out how well sanctions work? And it's on quite a lot of different levels. I'm not going to go through all of the things here, but I think one of the fundamental issues with this discussion is that, of course, there's always a threat about sanctions before sanctions are actually introduced. That means that in all of the cases where countries or individual actors did respond to the threat of sanctions, they will actually not be sanctioned, right? So when we look at a lot of these discussions about people listing, look, we introduced sanction here, nothing happened, we kind of admit all of the observations where sanctions actually worked as a deterrent to actually take the actions that was threatened by sanctions. So just so we remember that. It's not the case with Russia here, but I think for the more general discussion of sanctions, this is quite an important methodological thing. How do we actually figure out what would have happened without the threat of sanction, but also what would have happened if we didn't introduce sanction, as what's the counterfactual. Pretty basic methodological things. And Maria at SITE has written a policy brief about that on that webpage. All right. So getting back to the thing, my old IMF days, back then, the focus, I wrote this paper with Paolo Mauro back at the IMF in 2006. Back then, of course, the focus was how can we help countries avoid big drops in GDPs? And what are the big shocks that usually happen that are correlated with the large drops in GDP that we have seen historically? And our idea back then was basically, can the IMF or others help countries sort of insure themselves against these shocks? But at the same time, as we back then were thinking about this as sort of a roadmap, what should countries worry about, it's also a little bit a roadmap to what are the areas where sanctions can actually impose some damage if we think about reducing GDP. And if you go down this list, and I would say that Russia would fall in the category here of emerging market countries in terms of GDP level, etc. We see that the financial and macro shocks like currency crisis, banking crisis, debt crisis, sudden stops in capital flows, these are all things that are part of the sanctions discussion about the Russian financial sector, and we heard a much more detailed account of that. Then you also have the external shocks in terms of trade shocks, and you have interest rate, oil price, etc., etc. But anyway, my point here is that we can use this and understand why do we have actually sanctions now against Russia in some of these areas. Well, we actually think in the past that these are the type of shocks that are quite complicated to deal with for a lot of countries. The other part of the sanctions discussion is, of course, is it relevant? Can we actually impose sanctions on a country like Russia? Because this is, of course, a discussion about orders of magnitude. How strong is our economy versus the Russian economy? Does it matter to them what we impose sanctions on, etc., etc.? So this is just one take on that, which is comparing GDP for different countries, either in market prices or in purchasing power parity prices. And the simple fact here is that if you combine the EU and the US and sort of the Western allies, the economies of these countries is about 25 times the size of the Russian economy. So, you know, my take on this is, of course, that we do have some economic power to use in terms of imposing sanctions on a country like Russia. But something that also relates to what we talked about before here is that if we look at China, that discussion is going to be much more complicated, obviously, because then the economic power structure is quite different from what it is now with Russia. But, you know, my take of this is that if we are really serious about sanctions on Russia, we can certainly have an impact on what's going on in the Russian economy without it hurting us too much, which is always also part of the discussion. So if we think about it, what matters from a Russian perspective, what are the sort of orders of magnitude of different sectors of the Russian economy? I don't want you to look at all the numbers in the table, but they're going to be there in the slides if you want to check them out. But it's pretty obvious that oil and gas export is a really big deal for Russia. 10, 15, 20% of GDP, depending on which year, when the oil price is high or low. That's the order of magnitudes when we're talking about exports of oil and gas. And a little side note, oil is much more important in terms of export revenues than gas. It's usually 3 times as large as gas exports, which is why it's very important to think about sanctions against oil as we do today. Imports, Russia does import quite a lot. The financial system back then was in the order of 80–90% of GDP, so also quite significant. And then, of course, as we know, international reserves. Russia, before they started the latest invasion of Ukraine, they had foreign reserves worth about 36% of GDP, or $630 billion. So this was one of the ways that Russia was obviously preparing themselves to be less reliant on you know, the rest of the world. What they didn't realize was that also the reserves would be frozen in the West. So half of the reserves basically in the West have been frozen. So, but this is sort of very much connected to what sanctions did actually the West impose on Russia after the war broke up. So now we have frozen assets in the central bank. We have a lot of financial institutions. We have the whole de-swifting. We have a lot of restrictions in what goods we trade with them, both in terms of our own gas import but also in terms of exports of high tech and other things that could be part of the war machine. All right, so if we then go on and think about how can we actually assess what is the impact of all of these sanctions, one complicating factor is, of course, that a lot of the data that we would normally look at is not available and it's not published any longer by the Russian different entities. Some are not published on their English websites. Some of them require that you go through a VPN. Some of them require that you nowadays read Russian. So a lot of different efforts to make it more complicated for people to understand what's actually going on. And of course, this is part of the war effort, not making it obvious what the effects are or what sectors would be sensitive to sanction, etc. And of course, we need to think about other ways of assessing how do we think sanctions have worked. And always understanding that when we look at official data, including on GDP or inflation or anything, we don't really know if these data are true anymore. That's the problem. So there was recently a CPR economic policy conference at the Riksbank. A lot of these papers focused on the trade part of sanctions, and they estimate this in various more or less complicated models. A lot of them also focusing exactly on this global supply chain. So not just looking at first order effects of how large is Sweden's trade with Russia, but linking all of the trading that goes on with these supply chain things. And what people said there is that if you don't do the whole supply chain analysis, you miss a lot of the effects of sanctions, basically. Another thing here is that if you look at these models, I would say that the effects that come out of the models are quite small on Russia, but they are also even smaller on the sanctioning countries. So the whole discussion of sanctions are hurting us much more than it's hurting Russia, that did not come through in these kind of studies for sure. The other thing is that, some of these things are really in the details, as we always know. So you can focus on targeting specific goods that are extra important, and then you can go together in sanction coalitions to make sanctions actually work much more. So these are some of the things that come out of these trade models. I'm a much more basic macro guy. I don't have the patience to look at all of that data. So I kind of like the fact that, in my mind, Russia is the world's simplest macro model. This is Russian GDP. This is in dollar. Okay, that's biasing it towards my story, but this is US dollar GDP for Russia, the red line. The dotted black thing is the oil price. This is Brent oil price. You can see what happened at the time of Crimea. It was actually not linked, the drop in GDP then was not actually linked to the Crimea invasion. It was actually linked to the fact that the oil price fell like a stone in that time period. Of course, statistics in here, so you would say this is not a good correlation. I can do this in first differences or in growth rates. You basically get to a situation that, depending on what time series and what exact measures you put in for GDP or oil price, you get the correlation between these two variables between 50, 60% up to 90%. So you can basically explain 60 to 90% of Russia's GDP growth by one variable, which is how much its oil price changes. Okay? This is quite extreme. So we can actually use, when we talk about what happens with sanctions, we don't always have to trust their GDP statistics. We know that this is what it looks like. And we have a pretty good idea what happens to oil prices. So we can make our own guesses around what happens to GDP when oil prices changes. And I also just want to add one note on the oil price, because there was a lot of discussion about, also using this terminology, the Ukraine war brings up oil prices, which is a horrible wording for people in Ukraine. Russia's invasion in Ukraine led to a spike in oil prices that we can see here. But the big story with oil prices was that we were coming out of the COVID pandemic. That was really the big change in oil prices. And of course, connecting this to the whole inflation discussion, et cetera, people still talk about this as sort of the Ukraine war. And you can all see that's sort of a blip in this longer chart. And it's really about this movement that made the whole difference. And we're actually now, even with the latest increases in oil prices, we're still below the oil price that we had before Russia started the full-scale war against Ukraine. So just as a reminder, when we talk about, the whole oil price story and inflation, something else was going on well before the full-scale invasion. All right. So when we then look at Russia's GDP in 2022 and 2023, I want to make 2 points out of this slide. The first is that people say that sanctions didn't really matter to Russia in 2022. This is a scatter plot now of Russia's GDP growth here and the change in oil prices on the y-axis, and the red dot here, whoops, now I did the wrong thing, sorry. This thing here is where it actually ended up. This is sort of the official statistics, so take that with a grain of salt. But that's basically minus 2% at the time when oil prices had gone up with 40%. So if you just took that to the regression line, that difference is at least 10 percentage points. So, the counterfactual is not, thinking that maybe 0 would be the baseline somehow and the effect is minus 2. Russia basically could have had growth, I would have guessed, around 6%, and instead it was minus 2. So, sanctions certainly did have an effect in 2022 already. Now in 2023, there was a lot of discussions about the IMF forecast. This was the forecast they did a little bit ago, and now it's actually more positive. And my point here is that when we now try to make forecasts what's going to happen in 2023, of course we're going to have an enormous fiscal stimulus because of the war effort in Russia. So that's going to boost GDP. But if we think that the world can actually deliver a price cap on Russian oil at 60, the decline in what they get paid for their oil between 2022 and 2023 would be down here somewhere. Point is that I think that, well, we may well see official statistics from Russia saying that we had growth or 2 or 3% or something here. I'm not actually going to believe that number. I think that the fiscal stimulus is going to maybe help them away from a scenario down here, but I'm not going to believe anyone who tells me it's going to be up there. So that's just a small note, that we have to see through some of the propaganda that is now coming out in terms of what is GDP, what is inflation, how is everyone doing. And we need to basically look at different data that we think correlates historically with GDP and using that to understand what's going on, in this information war that is also now going on with Russia. And this is then a quick note on sanctions. So basically with oil, the West has said that we're going to cap the price that you can pay Russian oil at 60. And then there's a whole discussion now about this is then the red line is the price that gets quoted in India for Russian oil, and the other one is the price quote you get in Russia. And the thing is that between here, this is, free on board. So this is not including the freight, which is a problem, because when you put the price cap on that, you actually allow the shipping part of it to become a bargaining game between who's buying and selling. So it creates, an opportunity for these shipping firms to make extra billions of dollars, which is actually what has happened. So that has become a way of circumventing some of the sanctions without actually breaching the sanctions that's connected to shipping oil. So this is something to look out for. And there's a lot of discussion now, of course, how do we strengthen these sanctions? Because, again, we know that how much Russia is going to get paid for its oil is crucial for what happens to the economy, what happens to the government's ability to finance this war in Ukraine. Then this is a little bit also of a reality check when it comes to Russia. This is the ruble exchange rate. We can see that when the war started, they had a massive depreciation of the ruble initially. Of course, the central bank put lots of restrictions in, and they did a lot of policy, good policy moves, if you want to think of it like that, that actually helped stabilize the currency. And then they had a flood of oil money during 2022 before we imposed sanctions on how much they could get paid for oil. So they were basically swimming in foreign currency there, and the currency strengthened. But over time, with also the price cap introduced, the ruble was very weak recently, and the central bank had to introduce new measures to deal with the weakened currency. So this is also an example that things are not so great in Russia, as we often get told by Russian policymakers. And then also some of these official inflation numbers that come out of Russia, they can be 3 or 4%. When people do searches on specific goods that are not official data, they come up with numbers that inflation in some areas at least could be 60%. So again, it's very hard to know what is the true number, but I would not, trust the official statistics. Very quickly, longer-term growth outlook for Russia. You all know this thing. Growth needs to come from productivity, capital, or labor, right? Foreign companies, not all of them are leaving Russia, but quite a few of them. I'm not sure what that's going to do to productivity. Capital has been leaving Russia for a very long time, even before the Crimea invasion. The capital outflows between 2012 and before the war broke up was more than $600 billion in the private sector, which is the same order of magnitude as all of the Russian foreign exchange reserves. So, productivity down, lots of capital leaving, and then we know how many people's lives they are destroying in the war. A lot of Russian men have left the country. So basically, my take is that future growth in Russia is going to be very, very challenging. I'm running out of time. I just want to say that two things that I'm also involved in is this Yermak-McFall sanctions group, and then with the Kyiv School of Economics, they're both publishing a lot of independent analysis and discussions of what should be the next steps when it comes to sanctions and what has the impact been in different sectors. So if you're interested, this is some future reading on this. And then, of course, final thing. We have started a foundation here in Sweden to support the Kyiv School of Economics. They are still around, they're doing important work. If you want to help them, you can check out their webpage, or you can go and check out our webpage that's supporting them. So I'll stop there. Thank you.